It takes discipline, routine, education, action, and mentality. Put the first letter of those 5 words together, and that spells dream. It takes those 5 words to turn your dreams into a reality, right? If you really want it, then plan for it. If you really want it, then work for it. If you really want it, prioritize it, right? If you really want it, then commit to it. If you really want it, then focus on it. And if you truly do want it, bro, you must sacrifice for it, okay? The power of the tongue, this damn tongue right here, the power of the tongue is real, okay? Speak what you want into existence and keep all the negative energy away, okay? And then 6 months from now, you're going to make yourself proud. You really will. I want to talk about emotional discipline. Sticking to the trading plan no matter what emotions arise, emotional highs and emotional lows, avoiding impulsive trades caused by excitement or panic, controlling the urge to overtrade after a big win or loss. Emotional discipline, it separates professional traders from those who struggle with impulsive decisions, fear, and also greed. You must stick to and follow your strategy even after consecutive losses, right? Keep your risk management rules intact no matter how confident you may feel in a setup, and accept losses without frustration and stay focused on the next trade. Okay. Many traders who lack emotional discipline overtrade out of boredom and frustration. They revenge trade after losses to make money back, right? They also ignore their stop loss because of hope that their trade will turn around. And they'll close trades too early due to FOMO, fear of missing out on full potential profits, and even increasing their position size out of greed after a few wins, right? And then, with all of that, truthfully, without emotional discipline, even the best strategies, they will fail because impulsiveness and emotional like decisions, they override logic a lot of the times, right? So some common emotional traps and how to overcome them. One is fear of losing, right? Traders often hesitate to take trades because they fear losing money. Okay. Fear of losing, it causes early exits from winning trades to lock in small profits, and the fear of losing leads to avoiding trades that fit the strategy due to past losses, right? How do you overcome that? You got to accept losses are part of trading, and you got to remember even professional traders, they do lose. You want to focus on risk to reward ratios. If your strategy is profitable long term, then losses, they truly will not matter. Keep that in mind, okay? And you want to develop trust in your back tested system. If you have not back tested your system, you want to make sure that you back test your system. Another common emotional trap is revenge trading, right? After a loss, traders, they try to make it back by entering a new trade impulsively. And revenge trading often leads to larger losses because emotions, they drive decisions, right? How do you overcome revenge trading? You take a cool down break after a loss. You remind yourself that the market doesn't owe you anything. It truly don't. It don't owe you nothing. And you want to stick to your plan. You don't want to chase trades. And then another common emotional trap is overconfidence after winning streaks, right? You win multiple trades in a row and it creates this feeling of like invincibility, right? And then overconfidence, traders start increasing position sizes without proper risk management, like they're not sticking to the risk management plan. And then they ignore trade setups and take random trades thinking they can't lose. So, how do you overcome overconfidence? You treat every trade independently. Don't let past wins affect your next move, right? Stick to your risk per trade rule, regardless of how much you won. And remind yourself that markets, they truly are unpredictable, okay? We have no idea what's going to happen, and overconfidence, it can destroy your gains. Another common emotional trap is FOMO, the fear of missing out, right? So seeing a really big move, it makes traders jump into trades late, and it leads to chasing price action at bad entry points. And this causes poor risk to reward setups and unnecessary losses. How do you overcome FOMO? You got to understand that there will always be another trade setup. There truly will, and you want to follow your predefined entry rules instead of reacting impulsively. And you want to recognize that FOMO driven trades usually have lower probability. The last common emotional trap is emotional attachment to trades, okay? A lot of traders, they fall in love, right? They fall in love with the trade or a currency pair, and they refuse to cut losses because they believe the market will eventually reverse, right? Turn around. And it results in holding on to bad trades way too long, okay? And the way to overcome that, you have to detach yourself from individual trades and treat them like business transactions. Again, trading is a business. You have to treat it like a business. And you want to use automatic stop losses to remove emotion from decision making, okay? And accept that being wrong is okay. It's part of the game. Now, how do you build strong emotional discipline in trading? You want to stick to a strict trading plan, first of all. You want to define clear entry and exit rules before trading. You want to decide on risk management rules where you either risk no more than 1%, half a percent, etc., etc. And you want to stick to your strategy no matter what emotions tell you, okay? You want to set daily trading limits, establish a maximum loss per day. Example, like stop trading after losing 3% on your account per day, like you risk 1% three times, or avoid over trading by limiting the number of trades per session, and have a clear exit plan. Okay. If you reach your profit goal, have a clear exit plan. You want to take breaks and step away from the charts. If emotions are running high, you want to step away from the screens. Okay. You don't want to take bad trades impulsively or anything. You want to take a walk, meditate, reset your mind. And you want to recognize that not trading is also a strategy. Remember that not trading is also a strategy. Okay. You also want to journal every trade and emotion. We talked about this in the last video. You want to record every trade, including emotions before, during, and after. You want to look for patterns in your emotional responses to wins and losses. And you want to review your journal weekly to improve your emotional control, okay? And another good one is to use meditation and mindfulness techniques. So a lot of professional traders, they practice meditation to stay calm under pressure and focus on breathing exercises before trading to clear their emotions, right? And use visualization techniques to see yourself executing disciplined trades, okay? And accept that trading is a long-term game, okay? Understand that no single trade defines your success. Focus on the next 100 trades, okay? Not just one trade. And detach yourself from short term outcomes and focus on executing your edge, okay? The way to train yourself for emotional discipline, like some daily exercises, are like one before trading. You want to review your trading plan and your risk management rules. You want to perform a 5-minute breathing exercise to kind of stay calm, and then set a clear intention like, I will trade with discipline today. Okay. That's your clear intention. And then two, during trading, you want to check in with emotions before entering a trade. Like, are you anxious, feeling greedy, or feeling overconfident? And during trading, you want to stick to preset stop losses and take profits. And then if you feel emotional, just step away for a few minutes before making any decisions whatsoever, of course. And then three, after trading, write down your emotions in a trading journal. Review mistakes that were caused by your emotions, like fear, greed, revenge, etc. And then learn to improve the very next session, okay? Now, How professional traders master emotional discipline, they detach from money. A lot of professional traders, they focus on executing good trades, not just profits, okay? They control position sizing. They trade small enough so that a loss doesn't hurt emotionally, okay? And they take breaks. If they feel emotional, they step away and return whenever they feel a lot more calmer. And then they follow routines, right? Pre trading and post trading routines, they help them stay a lot more structured, okay? And then they trust in their system. They don't second guess themselves like mid trade or before the trade whatsoever. They trust their system. Final thoughts on mastering emotional discipline in forex. The best forex traders, they don't have better strategies than everyone else, okay? They just have stronger discipline. And then if you can control your emotions and execute your strategy consistently, your chances of success, they increase dramatically, significantly, right? Some key takeaways from this is emotional discipline. It's about sticking to your plan no matter what. Okay, just stick to it. Some common emotional mistakes include revenge trading, FOMO, and overconfidence. And to develop discipline, you want to follow a structured plan, keep a trading journal, and use mindfulness techniques. They truly do help, right? Professional traders, they detach from individual trade outcomes and they focus on the long term game. Don't focus on the money. I hope you got a little bit of value from that, emotional discipline insight and how professional traders handle their emotional discipline. With all of that being said, let's dive into the charts now and let's see what setups may be arising for some chart breakdowns, okay? So here we have AUD JPY. If you remember from yesterday's video, we were talking about how I believe that AUD JPY is now currently bullish. Why? Well, if we start from the beginning, weekly time frame previously ran out this external range low, right? And whenever a weekly runs out an external range low, we look for a 4-hour market structure shift bullish, okay? So we went to the 4-hour, okay? On the 4-hour, we had our market structure shift bullish over here. This was our entry here. Stop loss was down here. We mentioned that we got stopped out. Again, losses are a part of trading, emotional discipline, right? So we got stopped out on this position. I determined that this right here was also the previous weekly candle's low, and it got turtle souped, right? This low liquidity got taken out, and we were looking for another 4-hour market structure shift bullish, okay? Our market structure shift bullish came right here with this candle, closed above this 3 candle wick swing high, created some displacement that created a fair value gap. Price was also disrespecting and closing above down close candles, creating bullish order blocks. And it was also disrespecting bearish PDAs like bearish order blocks and whatnot, right? So in my eyes, price was bullish. Okay. And so with that being said, I anticipated that price would come back, tap into that area. And once price taps into that area, you could drop to the 15-minute and you could look for a market structure shift bullish, okay, for your entry opportunity. So right here is where price taps into that area, that 4-hour fair value gap, that 4-hour PDA, right? From the weekly PDA, external range liquidity, we drop to the 4-hour, looking for the market structure shift. Price taps into a 4-hour PDA, we drop to a 15-minute, looking for a market structure shift, okay? So with this one right here, as soon as price taps into that, we look for our last 3 candle wick swing high, which is right here. Boom. And we want to see, do any more get created? One right here. Boom. And then price closes above it right here, but it doesn't really close with a lot of displacement, right? Instead, it creates this one right here, And then boom, this is a displacing candle. This is beautiful right here. That's an awesome displacing candle, right? This displacing candle, market structure shifts. We have a change in the state of delivery with these two down close candles. We close above them. We created new bullish PDAs, disrespecting old bearish PDAs. There's this bearish order block right here that got closed above, right? And with all of that, price creates that fair value gap. Now, when price taps into that fair value gap area, we then take our entry on that fair value gap, okay? Boom. And we also anticipate, like you can see that price taps into this area here, right? So I've talked about dollar cost averaging in previous videos. So if you're comfortable with risking 1%, and you're looking to take two positions here, or if there's like three different PDAs, three different fair value gaps that price can tap into, split your 1% into three different positions. So risk 0.33%. Or like, for example, right here, I see two PDAs, two fair value gaps. So I'm going to break my 1% into 0.5%, right? And I'm going to take my initial 0.5% right here, and I'm going to put my stop loss below the second PDA over here. And I put it below the one candle, right? Yeah, I know that's a big stop loss. It's totally okay, right? And the second one, I will take if slash when, because we never know. Price is unpredictable. I will take the second position if slash when price taps into my second PDA right here, right? And that is where my other 0.5% will go. Stop loss always goes below the one candle of the fair value gap pattern, right? It's a 1, 2, 3 candle pattern, one candle, stop loss below that candle. And we target a 1 to 2R, right? Boom. So this one didn't hit a 1 to 2R, but it did hit a 1 to 1R. Now, I got to ask y'all, do you all prefer to go break even at a 1 to 1R? Comment down below and let me know. I would appreciate that. Or do you prefer to just let the trade ride out to either take profit or stop loss? I'm curious. Let me also ask, do you take profits at just 1 to 1R? Do you have a profitable system over a 50% edge win rate? You know what I mean? I'm curious to know. So let me know in the comments down below, right? So with this being said, let's just say this one rode straight to stop loss, minus 0.5%, but this one hit a 1 to 2R. That's plus 1%, right? So in total, we did make, 0.5% gain, because this one being a 0.5% risk hitting a 1 to 2R, 1% minus this 0.5% that we lost, 0.5% gain for that opportunity right there, right? And obviously, price isn't ready to fly quite yet. A lot of retail traders, I don't like to like put like terms upon people's trading styles. I think every strategy can work as long as you have a structured risk to reward approach, right? I'm not an asshole that just thinks that nothing besides ICT concepts or in uh like this kind of price action. I'm not like that. I mean, trend lines work, support and resistance works, supply and demand, um, everything works, right? EMAs work, everything works as long as you have a win rate and a risk to reward that supports that win rate, right? So that being said, whatever, you can tell that it's still dipping lower after that market structure shift right here. It's come down into this down close candle order block area right here, right? So we have this spot here, and now we could like drop to the 15-minute because it's a 4-hour PDA, and we could start looking for a 15-minute market structure shift bullish, right? That creates some displacement, huge displacing candle and all of that sexiness, right? So you got the 3 candle wick swing high right here whenever it tapped into it. came up, created a new one here, created a new one here. Price closed above that, right? But it's not displacing. It didn't create no fair value gap or anything like that. It has a fair value gap down here and another one right down here, but that's already been respected. And I want to see the candle that closes above them to displace, like huge candle like we seen over here, right? This candle that displaced and market structure shifted was a huge candle, and it's the one that created the fair value gap, right? That's what we want to see. We want to be kind of picky because, again, we're protecting our account, we're protecting our balance, right? And so, with that being said, you have price coming down even lower, creating this 3 candlewick swing high right here, and then creating this 3 candlewick swing high right here. Price just closed above that one. That's a big candle right there, but it's not really a displacing candle. You know what I mean? Like, price can easily just come back down lower. And another thing too is that with that candle, it closed below this PDA, respecting this bearish PDA right now, right? It didn't disrespect this bearish PDA. If anything, I'd prefer to see price close above this one, disrespecting this bearish PDA, and hell, close above these down up close candles. This is a bearish order block right now too. You know what I mean? If it disrespects that, it becomes a mitigation block, and price can retrace down into that, take our entry. It can retrace even lower into this, and because once it closes above, it can turn into an IFEG re and like we could look for opportunities upon these points that get closed above. Bearish PDAs can turn into bullish PDAs whenever they get disrespected, right? A bearish FEG get closed above, it becomes a IFVG, right, can become a bullish PDA. It's just like a break and retest, or like a support and resistance break and retest model. It's all the same, bro. Like I'm telling you, like the longer I've been in trading, the more and more I've been in trading, I like understand that trading is like all in all similar in many ways as far as like strategies go. And like there truly is only one strategy at the end of the day, and it's risk management, right? As long as you can have a solid approach with a good risk to reward ratio, like let's put it to you this way, right? You can have a strategy that loses 9 times, and on the 10th time, you win. But on that 10th time, if you hit a 1 to 11 or a 1 to 12 risk to reward ratio, right? You lost 9 times, you risked 1% all 9 times, you're down 9%. And on that 10th one, you risk that 1% again, you hit a 1 to 12, you made back 9% and you're up 3%, right? Your strategy has a 10% win rate, but you hit a 1 to 12 R, right? Just to kind of put that into perspective for you. That's profitable. If you can maintain that long term, that is profitable in trading. Okay. So I hope you got some value from this video, you guys. If you did, drop a like, please. Comment down below if you have any questions about my approach, about psychology, about anything whatsoever. I can elaborate it on future videos, elaborate upon it in future videos. I've been talking for like 30 minutes now. My tongue is all done. But yeah, you guys, if you're new here, subscribe for more videos. Turn on that bell so you know when I upload. I'm going to be uploading pretty consistently. I'm trying to upload every single day, if not every single other day. I'm trying to give new video ideas and approaches to this channel. And I just kind of want to provide motivation. I want to inspire y'all. I want to provide value. I want to help you guys succeed, not only in trading, but in life. And by y'all tuning in, it helps me succeed. You know what I mean? It's a great feeling whenever I see you guys tune in, especially people who have been around since like way back when I started this channel a couple of years ago. It's really cool to see you guys tune back in, and even returning viewers. If you watch multiple videos, it's really cool to see y'all comment on every single video, like seeing the same name over and over and over again. it's a really cool feeling, and I appreciate that you guys give me that feeling. So again, I hope you guys enjoyed. I don't want to take up more of your time, so we'll see you guys tomorrow.